Hello and welcome to Credit Versio's Q&A Wednesday live for October 27th. I am your host, David Michalek, and every week at 6 p.m. Eastern Time, we come together on Facebook and YouTube to talk about credit. As a consumer credit expert with nearly a decade of experience, I've conducted over 10,000 one-on-one credit coaching sessions, and I'm very much looking forward to helping you understand and improve your credit. Joining us today is America's #1 credit expert. He has 30 years of experience in the credit industry, including years working for both FICO and Equifax. He's one of the few credit experts that actually comes from inside the credit industry. Let's welcome John Ulzheimer. There he is. John, welcome.
Hey, David. How are you doing?
Doing well. I was going to wear my Golden Knights jersey on this live to bring as much good juju as possible because our boys aren't doing so great. But you're gonna be rooting for some. You're gonna be watching the World Series while I'm trying to see if we can get out of our 4-loss slump.
That's I saw a meme, or I guess a picture yesterday, kind of it was the United States, and it was what percentage of the United States is rooting for the Braves, and what percentage of the country is rooting for the Astros. And it was like the entire country was blue for the Braves, except for like this tiny little circle around Houston that was red. And I think that's a holdover from their 2017 cheating scandal. I'm actually a gigantic Astros fan because I moved from Texas to Atlanta. So I was an Astros fan while I was in Texas, and then I moved to Atlanta and became a Braves fan. So I can't lose. I'm actually a fan of both teams. So
Yeah,
yes,
yeah.
go
So
Braves.
just hoping for a good game. I can appreciate
That's right.
that. Before we get rolling, one thing that I want to make sure that is really clear, a little bit of a change with the way that John and I do our lives. So as you know, John comes aboard twice a month. And what we're going to do starting from today is John is hands down the most knowledgeable credit expert in the country that I've ever met or even know of. So I'm going to tap John for his knowledge when it comes to improving credit, what credit scores mean, how credit works, everything that's related to credit. So the area where we're not going to jump into is credit repair advice. So even though John is an expert on all subjects credit, we're going to sidestep specifics on credit repair. Now, by all means, post your credit repair question if you've got it. I'm just not going to bring it up on the screen and address it during this live with John, but I will answer it once the live is over. Okay, we got Matt here with Ghost Rose. All right, Louis, welcome. Prince Charles is back. Welcome, and we've got Arian again. And you guys are, if nothing else, you are consistent. I love it. Okay,
That's
and then
great.
Manswell's got a question right off the bat, and let me get to that in a second. So John and I emailed back and forth earlier, and there's a subject that I wanted to start with today because it's incredibly important, and it has to do with that time of year that we're in. And the time of year that we're in is when you go into Costco or Walmart or Target and you got Christmas stuff up. You got holiday stuff up. It's not even Halloween yet, and already the buying frenzy we're all getting primed up already. Amazon's got stuff. Everywhere you turn, it's like, all right, everybody, prepare to spend some money for Christmas. And John, this is a time of year where people make a lot of mistakes. In fact, I think I could make a really good case that credit repair's biggest months and credit coaching's biggest months are January and February and March because everybody has a moment to look back and go, my God, man, what did I do during November and December? So maybe you can talk a little bit about some good practices this time of year when it comes to credit, how to use credit, and the holidays.
Yeah, it's interesting. This is the time of year, and and everyone who's saying hello back. This is the time of the year where my phone and my email starts to blow up from reporters who want to write their normal calendar. It's very predictive articles about how Black Friday, Cyber Monday, and this kind of last 2 months of the year,
Mm-hmm.
how people tend to lose their minds and shop very disproportionately to how they shopped the prior 10 months. And so And there's also another thing. To the extent people actually still go to the mall, there's this possibility that you're going to end up in a retail store. You're going to be offered 10% off, 20% off if you'll sign up for a store credit card as as part of your shopping experience. And so some
Right.
some consumers obviously take advantage of that so they can save some dollars on their purchases. So there's a lot of meat on that bone, but generally what happens is if you look at the amount people spend in the last 2 months on their credit cards, it's higher than the average amount that they spend on the prior 10 months. And so what that means is when your statements start to show up in December and January is your balances are going to be higher going into the new year than they were ending the year. And of course, as we know, one of the very important metrics in credit scoring systems is the revolving utilization ratio, aka the credit utilization ratio, aka the balance to limit ratios. So that's one of the important metrics. Another one that people tend to ignore and kind of overlook during this time of the year is the number of accounts with balances. And so my wife's not home yet, so I can say this, but if she were home, I could not say this. She has all these retail store credit cards, right? And she, as much as I love her, she thinks that she has to use a Gap card at the Gap and a Macy's card at Macy's and a whatever card at whatever, rather than just using a Visa for everything. I promise you the Gap will take your Visa. So when she's doing all this holiday shopping, to the extent that she goes to these different retail stores and buys things, you end up with what I call nuisance balances. You have these kind of small dollar balance, $79, $149, these nuisance balances peppered throughout your credit report because of how you're shopping during this holiday season. And you end up with a lot of accounts with balances. And if you're going to talk about the utilization ratio, then you absolutely have to talk about the number of accounts with balances. It's in the same category of metrics in FICO and VantageScore's credit scoring systems. Collectively, that stuff is worth about a third of the points in your score.
A lot.
So it's a big deal, especially for people that are kind of on the fence and they need 10 points, they need 20 points, as this is the kind of stuff that can really put them behind. And having nothing to do with credit reporting and credit scoring, credit card debt is really expensive. Retail store credit card debt is even more expensive. So the average interest rate or the average APR on a general use credit card like your Visas and your MasterCards is about 17%. And that's about the same as about what it usually is. It's usually in the 16 to 17% range. That's pretty expensive, right? I mean, no one pays that for their mortgage. No one pays that for their car loan, but we happily pay it for credit cards. Retail store credit cards, your APRs are going to be into the 20% range. And that's kind of a subprime APR, even if you've got really good credit. So you've got the credit scoring issues, but you also have the dollar issues, which means that whatever you purchase for the holidays, if you carry that balance, it's just going to become that much more expensive because of how expensive it is to service that type of debt. So, okay, well, John, thank you for that advice. What should I do? So here is the call to action, or here's the what to do portion of my little speech, which is if you're going to spend a bunch of money on credit cards during the holiday season, fine, do it. We all do it. Don't avoid it. If you're going to do it, do it. But limit the number of cards you're going to use to make those purchases. So to the extent you can make all those purchases on one card, then do that. If you need to spread them over two cards, fine. Just don't let, your holiday purchases turn your credit report into a minefield of credit cards with balances all over them. Your utilization is calculated at the aggregate level anyways. And so it doesn't matter if you've got balances on 5 cards or all of your balance on one card, you still have the same amount of credit card debt. So that would be my advice. I also would advise people not to apply for anything expensive during the holiday season, because this is the time of the year where your credit scores are probably not going to be as healthy as they would be otherwise. And of course, in about 2 months, I'm going to start getting a bunch of phone calls from people who want to write New Year's resolution articles. And one of those resolutions is always to get out of holiday debt. So we're going to have the same kind of bookend of this conversation in a couple of months, which is going to be talking about how bad the things you did the prior 2 months have now affected your credit reports and your credit scores and your finances.
Yeah, it's a conversation that I've been having every year for almost a decade now, and it's
very predictable.
Probably, it's very seasonal. Emanswell, Speaking of credit cards, good question. Can a secured credit card raise your score?
Yes, it
Question.
can. And here's why. So even though the furnishing of a secured card by the credit card issuer, it clearly indicates that it is a secured card, credit scoring systems do not consider the fact that it is a secured card during the scoring process. So you're not penalized simply because you have taken out a secured credit card. You're also not penalized because it's a credit card. You're also not penalized because it's a retail store card. You're also not penalized because it's a petroleum card. And you're also not penalized if it happens to be a charge card. So the type of card is not relevant in. You're also not penalized if it's not even a physical card, like the Apple card or what some of these other cards that basically
Yeah.
are nothing more than just almost like an e-card, if you
Yeah.
will. You're not penalized because it just happens to be that type of card either. It's really about the attributes of the account that are influential to your score. So to the extent that you've got a secured card on your credit report and you've got some amount of a credit limit and you're not using the balance, or you've got a really, really low balance relative to that limit, then certainly that can be helpful to your score. If it's an old secured card, and I see a couple of other questions about this topic that I think we're going to get to,
Mhm.
if it's an old secured card, then it's absolutely helping, because one of the metrics in scoring systems is that they're those age metrics, and so the average age of your trade lines and then the age of your oldest trade line. So certainly, if you opened a secured card years ago, and you're paying it on time, the value that it's adding to the quality of your credit report and scores is much more than just the fact that you've got a positive trade line on
Mhm.
your credit reports. And so the one thing that I would caution you with respect to secured cards is, generally speaking, the limit on secured cards is pretty low.
Yeah.
And that's because people tend to not want to plow 5 or 10 grand into a secured credit card just to get a $5 or $10,000 credit limit. And I get it, it's not money well spent. So you end up
Right.
seeing a lot of things, David, on a credit report, secured card, $400 limit, secured card, $300 limit. You see these really,
Exactly.
really low limits, and they serve a purpose, right? I mean, they're very easy to get. You're
Hmm.
essentially buying the account. Um, and so they tend to be a very attractive option for people who are rebuilding their credit, building their credit from scratch, are new to the country, and so they're a very attractive of option because of just how easy they are to get, and they do have a little bit of buying power relative to how much you've put in as your security deposit. The problem with that is, because the limit is so low, even modest purchases are going to chew up a considerable percentage of your limit. I mean, if
Yeah.
you've got a $500 secured card and you put tires on your car, I mean, you've just chewed up so much of your limit. If you did the same exact thing on a credit card with a $20,000 limit, that was an immaterial purchase in the grand scheme of things.
Exactly.
So those are some of the things. There's pros, obviously, and then there's some cons. Finally, to kind of use the tree falling in the woods analogy, if no one was there,
Hmm.
then no one heard the tree falling. Um, if the secured card issuer does not report it to all three of the credit bureaus, then you're not getting maximum value out of that card. So
Yeah.
before you apply for a secured card, do a little bit of research. Don't pay so much attention to the APR, because if you pay it in full every month, and the APR is irrelevant.
Right.
If the value of the secured card is maxed out, if they do in fact report to all the credit reporting agencies. And so make sure that you choose one that does report it to all three.
John, in all the years that I've been working as a consultant and spending a lot of time on the phone, really answering people's questions about why things did something on their credit report, that's probably the most common call that or topic that I've answered in my almost 10 years, which is, hey, my score just dropped 75 points. I didn't do anything. What happened? Well, because I've had this conversation thousands and thousands of times, I already have a pretty good idea of what happened. So the first thing that I look at is, do they have new credit? And is it a secured credit card? What was the balance last month? And what is the balance this month? And about 75% of the time, that's the answer. So they
Yeah, they're
got that
maxed out.
300, they had it maxed out. Yeah, so the common story is, and this is why you got to be careful, and why John was really emphasizing keeping an eye on your utilization rate and how much of a percentage that is on your score is I can't tell you how many conversations I've had with people where they got that secured credit card for $300 because sometimes that's the minimum for a lot of cards that credit repair companies will promote. That's the starting point is $300. And then they go out and have a nice dinner night on the town thinking, well, I'll use my credit card, let's activate some things. Didn't realize that they should pay it before the end of the statement date rather than the due date. And then
Right.
next month, that $300 secured credit card that last month had a zero balance now has a $280 balance, and they're overutilized and like, why did my score just drop? And that is a common theme when doing credit coaching in this space to the public.
Yeah, the ratio is the ratio. It's just math. It doesn't matter
Yes.
if it's a $100,000 limit and an $80,000 balance, or a $1,000 limit and an $800 balance. It's still 80%.
Right.
So don't think that is a benign activity, maxing out a secured card or multiple secured cards.
Yeah.
It's certainly not a benign activity.
Yeah. One of the habits that I've gotten into, especially over the last couple of years, even though I've got several credit cards, and all of them are paid off every month. I don't keep a balance. It's very rare that I do unless I've made some big purchase that I got to chop in pieces over a couple of months. But it's always just the one card. I always use just the one card. Everything else, I'll maybe once every 6 months I'll throw something on there just to keep it active. But
Right.
for the most part, everything goes on my venture card.
Yeah, I like it, even though I don't spend a lot of time on the road anymore because of COVID, but I mean,
Yeah.
I still like my same American Express card because the benefits were really great when I was traveling a lot.
Yeah.
And maybe hopefully someday I'll be on the road again and things will, I guess, be back to normal. Um, but I'm the same.
Right.
I'm the same way. I try to localize all my spending to one card so I don't pollute my credit reports with all these balances. Certainly,
Yeah.
there are some places that don't take American Express, so I have to use a backup card, which is fine.
Right.
I get it, but I do
Mhm.
exactly what you're talking about. Is I really, especially the low balance cards where I've only put a few $100 on it because I just don't take Amex at that particular store.
Yeah.
I don't ever let that get to a statement. I
Mhm.
always I don't pay the Amex because if the balance tends to be larger, I'll let that go to a statement and then I'll pay it before the due date unless I'm in the market for something. So I actually just financed a car a couple months ago, and
Mhm.
I absolutely made sure that all of the balance of my credit cards were paid prior to the statement closing date. And I knew that I tried to time my application for the car loan,
Yeah.
so that I knew that the F&I manager would pull credit reports and they would see balances of zero on all the credit cards, even though I always have a balance on at
Yeah.
least one, if not two of them every single month. It's strategic credit management. And I also had to thaw all three of my credit reports because I had no idea which one they were going to pull. They actually pulled two of them.
Oh,
And
okay.
so it in today, look, if we had been having this conversation 10 or 15 years ago, everyone sitting here watching would have been like, I have no idea what that dude's talking about. This is a waste of my time.
Yeah.
We're in a different era right now. We have become way more engaged with our credit reports. We know a whole lot more about credit scores. The
Right.
amount of really good information about those things are available to consumers. A lot of the stuff is free. Credit reports are free. Credit scores for free.
Mhm.
All the content is now free. You used to have to buy all that stuff. Well,
Yeah.
and so now
Remember.
credit freezes are free. You used to have to pay for those too.
Yeah.
And so I really like the era that we're now in, that, rather than just talking about how to manage our finances and our investments, we're now talking about how we best manage our credit reports and credit scores,
Yeah.
very tactically and strategically, even right before we go to apply for something, because we know if we
Yeah.
do a few things that we have a little bit more control over those numbers.
It's great to see that this kind of information you and I are talking about is becoming more and more popular. Like the level of savviness that people have is gone up a lot just
Yep.
when I started this about a decade ago. So it's really, really good to see. Next question from Ariane. When does short credit history stop hurting scores? That is my number one reason code across all agencies. Oldest account is 6 years, 5 months. Average is 3 years, 4 months. Great question.
Yeah. So if I don't know if you're willing to share this, but I bet your scores are pretty respectable, because if to the extent that time and file related characteristics are the top score factors when you're getting your scores, that's actually great. That means utilization isn't the number one factor, and it also means derogatory entries are not the number one factor. You you're discovering what a lot of people discover, who are not my age, which is that there are certain things that are actionable on a credit report, and there are certain things that are not actionable. So you cannot, obviously, and you would never want to accelerate time. Someone who's 25 years old is not going to have a 25-year-old credit report, and they're not going to have a 20-year average age of
Mm.
their accounts, because that just doesn't work out like that. So you're, I'm sorry to have to tell you this, but you've got a ways to go. Generally speaking, to max out the points in that particular category, those time and file, there's only two of them. There's only two metrics in that category: the average age of your trade and the oldest trade line. You really need to have a credit report where you're hitting 15 and 20 years for those
Yeah.
metrics before you start maxing out that category. And why is that important? Well, it's a 15% category, which means it's 150% the value of inquiries, and people love to obsess about inquiries. So unfortunately, that's one that's really hard to affect. You can pay your bills on time. You can pay down your credit card balances. You can choose to not apply for credit and therefore not get a bunch of inquiries on your credit report. But you can't make your 5-year-old American Express card a 25-year-old American Express card. So you're actually in a really good position where you've taken care of all the things that are controllable, and now it's just really a matter of take your time, watch your credit scores grow. I can tell you this: you're not going to hit 850 until you max out that category. You have to max out every single category in order to start bouncing up around the 840, 850 range. And so I think you're just going to have to start being happy with the 810s and 820s for a while, until you do get to the age where your credit report is starting to click off those 15 and 20-year average ages and the ages of your oldest account. So it's also a good rule of thumb. And my father does this, and drives me crazy. He thinks that just because he closes an account, he has to now argue with the credit bureaus to get it removed, even though it's in good standing. And what he ends up doing, he's actually successful sometimes, because they're just tired of hearing from him, I suppose. But you never ever want to argue about having good accounts removed from your credit reports. The credit bureaus are
Right.
eventually going to remove that stuff as a matter of policy, even though they're not required to by law. Um, but you would never ever want to argue with a credit bureau to have your good closed accounts removed. Just forget about them and leave them. Yeah, I mean, look, your credit scores are exactly. So you have the same dilemma that everybody else has when they do really, really well. And those are elite level credit scores, right? I mean, you're just going to have to be happy, unfortunately, with scores like that for a while, until you start kind of clicking off those different age thresholds and you start earning more points in that particular category. But good job
Yeah.
so far. Those are great. I bet companies are
Yeah.
throwing money at you at really competitive rates.
Yeah. So, Ariane, just to give you a little context for that, I mean, when I got into the credit education, credit repair space as a client about 10 years ago, I had to start from scratch. And I'm 51 years old, and I have a credit report that looks like somebody who is maybe, 30 years old, because I lost all of that time. So my scores, which hover in the not too far from yours, 770, 780. I had one of my FICO scores, John, hit 802 just recently. So I haven't seen anything in the eights in a little while.
Feels
So
good, doesn't it?
so yeah, it does. Yeah, yeah. And having everything paid off on the credit cards helps. The auto loan helps. Keeping my nose clean, making good decisions is going to help. And Arian, you're on your way. You're looking fine. Oh, here we go. So, John, I think you jinxed us, because you said the I word. So now we got an inquiry question. I know you saw this on here. Louie Lou, how many hard inquiries affect one's credit score?
Yeah. So, and I don't know if Louis Lou has been around long enough to hear the inquiry stories, but inquiries. I did a presentation at an event one time, and I spent about an hour talking about inquiries, and people almost ran me out of the room because I spent so much time on inquiries, and half the crowd was like, "Oh, this is great," and the other half of the crowd was like, "Bro, you're killing me. Get off the damn inquiry. Talk about something more substantive."
Yeah.
And ever since then, I've always kind of joked around about how much time I spend on inquiries. So the answer to your question, which is how many hard inquiries affect one's credit score, is it's variable. So for certain consumers, one inquiry can cause a material difference in your score. For other consumers, it can take several inquiries before there's a material difference in your scores. Generally speaking, obviously having fewer inquiries is going to be better than having more inquiries, but that not all inquiries are influential to credit scores. That would be factually inaccurate. If you ever read anything that says that all inquiries lower your scores or all inquiries are worth X number of points, that would be incorrect. But generally speaking, you want to have fewer of those than more. Hard inquiries remain on credit reports for about 2 years, 24 months. But they are only considering credit scoring systems for their first 12 months. And so after they become 12 months old, even though they're still cosmetically present on the credit score, the effect of that inquiry or those inquiries is absolutely going to be zero across all credit scoring platforms. And there's another thing that people tend to get wrong a lot is that they think that the effect of an inquiry changes over time, like how a late payment changes its impact over time. Or to take Arian's topic earlier about the age of a credit report, how the age of the credit report, how that changes over time, and therefore the influence also changes. The influence of inquiries does not change over time. There is only one metric with respect to inquiries, and it's the number of inquiries within the past 12 months, which means that if you have an inquiry, let's say you have one inquiry, and that one inquiry for you just happens to be influential, okay? And let's just say that the influence just happens to be 6 points, and I'm just making that up. Well, that inquiry, the effect of that 6 point, it's going to be the same for the entire 12 months because the metric is number of inquiries within the past 12 months, not number of inquiries in the past 3 months, number of inquiries within the past 6 months, number of inquiries within the past 9. So it doesn't have what's called variable classing. It's not classed like that, where there's different buckets as far as the age of the inquiry. There's only one bucket. So if you've got an inquiry that's in that bucket, it's in the same bucket the entire time that it's influential. So if you do have an inquiry on your credit report and it is influential in your score, and your score changes over time, it's not because the inquiry is aging. It's because of something else changing on your reports.
Great. I just posted in the chat a link to a video that John did a little while ago. That's at creditversio.com, not the portal, but on our main website, called Everything You Need to Know About Inquiries. A great video that you did, John, some time ago. And for people who've got inquiry questions that are watching, check that out. I think it's going to answer all the questions that you've got. Question from Dida. Hey, welcome back. Here's a regular. If your credit reports are frozen, can a lender still pull it? Great question.
The answer is maybe. So for those of you who don't know what a freeze is, it's either called a credit freeze or a security freeze. It's the same thing. And some of the credit bureaus have kind of similar products called credit locks that do some of the same things, but they're not credit freezes. And so just FYI, keep that in mind if you're searching around on the internet and you see things called credit freezes, or security or credit locks. It's not the same as a security freeze, even though they are similar as far as the practical impact on a credit score. So when your credit reports are frozen, the reason you would freeze your credit reports is to prevent fraud. So when your credit reports are frozen, lenders with whom you do not have any sort of relationship are not going to be able to access your credit report. So essentially, it's been taken out of circulation for those particular lenders with whom you have no relationship. So in that scenario, if you apply for credit or someone else applies for credit in your name fraudulently, they're not going to get a credit report because they're going to hit a wall, and they're going to get an alert back from the credit bureau indicating that the credit report is unavailable because it has been frozen or that there's a security freeze on it, and then the application is going to likely be denied. And you're going to get an adverse action letter, and it's going to indicate that you were denied because they couldn't access your credit
Yeah.
report. And that's how it's supposed to work. So there are some exclusions to the security freeze wall, meaning that there are some times where you can get through it. Number one, if you want a copy of your own credit report, then clearly you can get a copy of your own credit report. Number two is if a debt collector is trying to collect a debt from you, they are still going to be able to get access to your credit reports for the purposes of things like skip tracing, to determine whether or not you have the capacity to make a payment on a collection. So the security freeze does not stop that activity. So lenders with whom you have a current relationship are also going to be able to get through a security freeze, meaning that they can they can still pull your credit reports periodically for account management purposes, and that's to see if they still want to do business with you under the same terms. So certainly, yes, it's going to stop a lot of the activity, but there are some limited exceptions to the security freeze block.
And this is would be in reference to a comment that you made earlier before you bought your new cars. You had to unthaw your credit reports.
That's right. I had to thaw, and I had to thaw all three of them into. When you freeze your credit reports, there is no tri-bureau credit freeze, right?
Yeah.
Like there's tri-bureau credit monitoring, and if you put a fraud alert on one credit report, then they communicate it with the other two credit reporting agencies. So it's like a one-stop shop in that respect. Security freezes are different. If you freeze your Equifax credit report, that your TransUnion and Experian reports are not frozen. You've got to do them all independently if you want to freeze them across the board, which means you also have to thaw them independently if you want them all available when you do eventually go and legitimately apply for credit. There's a lot of articles about security freezes that are very critical of the process, and I don't understand why. And one of the aspects of the criticism is that it makes the process of applying for credit more cumbersome. I mean, yeah, to the extent that you've got to click on an app and essentially unfreeze your credit report, I'm not sure in today's era that's considered to be, an inconvenience. Especially, I know what an inconvenience is. Arguing with the credit bureaus that this fraudulent inquiry and that fraudulent collection are really not mine. That's an inconvenience. An inconvenience isn't, swiping an app or doing something to take your credit reports out of circulation and then put them back into circulation. So I don't understand the criticism about it, but whatever, that's just me.
I wonder if their position is maybe, I don't know, 10 years old or 5 years old when you froze your account. If you wanted to thaw it, you had to call and give them a special number. Like you had a code. So and people would forget the code. I mean, there's all kinds of problems with that. But today,
that's right. You're right.
It's just a swipe. Yeah, it's just a swipe on the app, and it's really not all that difficult to do. You can do it in a matter.
Yeah.
How long did it take you to thaw out your credit reports before you bought the car?
I did them. You can schedule it. You can actually kind of schedule a period of time in a calendar. If you want to, if you know you're going to apply for credit on a Saturday, you can, cause your credit reports to be thawed on the Friday and then have it set to refreeze on the Sunday. So you can actually set the time frame where you want the thaw and the refreeze to occur. So I just set it, a couple of months in advance, knowing that I was going to wait. That was the weekend where I was going to go do my thing. But I will tell you this. I applied for a business checking account with a bank, a well-known bank, and they wanted to pull my personal credit report as part of the application process. And I was sitting in the bank branch. This is several years ago, and one of the questions when I was filling out the application, it was very clear that I was going to have to personally guarantee the performance of the account. I was like, oh, this means consumer credit report.
Yeah,
mine are frozen. So I literally had to scramble to my phone, log into the account with the credit, and they pulled Equifax. They told me they were going to pull Equifax for the personal guarantee aspect of it. So I actually logged into the Equifax website, not their app, the Equifax website, and I knew what my password was because I'm the one who set the password. And I was able to thaw my Equifax credit report almost in real time while I'm sitting there in the bank waiting for them to pull my credit report and open my checking account. So it while that was not the optimal way of doing it, it still indicated to me that the process of thawing was almost in real time because I did it. So again, yet another thing to not criticize the thawing and refreezing process is it seems to be real time now.
Yeah, sounds easy to do. Question from Arian. So is the age of your newest account a metric in any category? I keep seeing people on the Trusted My FICO communities talk about the age of your youngest I think revolving account is probably what you meant.
Yeah, so there's a lot of time since related metrics, time since new account. That's not an age metric. So there are only two age metrics, which is time and file, or excuse me, average age of trade and the age of your oldest account. There are also metrics that consider how recently did you open an account, which is a very different type of metric. So certainly the age of your most newly opened account is certainly a factor in your score, but that doesn't have anything to do with those average age. So, and yes, it's going to lower your average age of trade just because that's how math problems work. But that isn't necessarily that particular metric. There is a completely separate and independent metric that considers how long you open particular certain types of accounts.
Michael Burris with a question: how to unfreeze credit on LexisNexis?
Yeah, so I'll be real honest with you. I'm not familiar, other than the fact that I had a 400-page LexisNexis report, which is about 300 pages of the same information just over and over again. LexisNexis is in fact a consumer reporting agency. You can in fact freeze and unfreeze your LexisNexis consumer report. You just have to go through their website to do so, and it has to be free. I can tell you from my understanding, that's a pretty common credit repair strategy, is trying to freeze your credit reports. There's a perception that companies can't furnish information to the credit bureaus if your credit reports are frozen. That's not accurate. If you have a charged off account, they can still be reported to your credit reports even if they're frozen. But certainly because LexisNexis maintains a consumer reporting or a CRA database, you absolutely can freeze. They actually maintain more than one. You actually have your CLUE reports. I don't know if you know what that is, David. The Comprehensive Loss Underwriting Exchange. It's basically the credit bureau for insurance companies. And you have a CLUE report for homeowners insurance and a CLUE report for auto insurance. And if you filed a claim within the past 7 years for either a home or a automobile, then information about that claim is in the CLUE database. And the CLUE database is in fact a CRA, and it is a consumer report, and it can be used obviously by insurance companies when you apply for coverage.
Yeah. Almost like the banking's version, although this is not a reporting agency at all, but like check systems where the banks have their own method of keeping track of people who've written bad checks or closed accounts with balances that are unpaid. Yeah. So some industries.
And check systems is also a CRA.
Oh, is it really? Okay.
Oh, yeah.
I learned something today. Excellent.
Yeah. If you look, the reason I'm saying CRA instead of credit bureau is because LexisNexis, they're not a credit bureau. Check systems isn't a credit bureau. Actually, the term credit bureau isn't in the FCRA. It's consumer reporting agency. So you have consumer reporting agencies, and Equifax is a type of consumer reporting agency, just like LexisNexis, just like SageStream, just like Experian, just like TransUnion, just like NCTUE, just like check systems. So the overarching category is consumer reporting agency and consumer reports. We just call them credit reports. And credit report disclosures because that's more specific to our credit data.
Gotcha. Okay, we got a new question. Let's see. And then we're almost down to the end. We got a few minutes left. Miguel, I have a short credit history with $200 credit limit. If someone adds me as an authorized user with a 10-year-old credit card with a $10,000 line of credit, how will this affect my score?
Yeah, so this is a very common credit building and credit rebuilding strategy. In fact, that's how I built credit. back in the dark ages, my father added me as an authorized user on his Sears retail store credit card. Um, and it's still a common strategy today for people to build credit. So if you've got so there's a couple things that happen when an account is added to your credit report, whether it is a trade line or it is something else. And so I'm adding some more light because it looks like I'm getting dark. There we go. So if you were to add a new trade line to your credit report as an authorized user, it's still considered in your score, and the metrics associated with that account are still considered just like if it was your account. So the balance to limit ratio is going to be considered. The fact that it has a balance on it is going to be considered. And the age of the account is still going to be considered. So if you become an authorized user on an account that's very, very old, then it can help those age-related metrics that we talked about. If you are added to an account that has a no balance and a very high credit limit, then it can help those utilization metrics that we talked about. If you're added to an account that has a bunch of that stuff that's in bad shape, then all that stuff can hurt your credit report. So large balance relative to the limit, delinquent history in its past somehow, or the account is brand new. It's it's a mathematical certainty that it's going to lower the average age of your trade lines.
All right. Okay, excellent. Now, what do we got here for time? All right, so about 43 minutes. Very good. Michael, I do see your post in there. I'm not going to bring that up because it's credit repair related. I will answer that in the post a little bit later today, worst case scenario tomorrow. Unless we've got another question that pops up like right now. John, I know you got a World Series game to go to, and I got to make sure that I got to be cheering on my Golden Knights to make sure that they get out of this losing slump. Okay, so everybody, thank you so much for joining me and John today. I appreciate you participating. And, okay, so what do we got? Got 2 minutes, John. All right, let's see if we can sneak this one. Hey, JL is back. Hey, guys, I'm trying to find out who's housing my bankruptcy. I've received my Lexus, Nexus, and Innovis report, and I don't see them.
Well, I mean, the clerk of the court is housing your bankruptcy. That's where your bankruptcy is. And it isn't, LexisNexis is in fact the public record vendor that the credit reporting agencies use for bankruptcy information. And so if it's on your credit report, like your traditional credit reports, your Equifax, Experian, and TransUnion, then it's not stored by LexisNexis, but it is absolutely being, they are the vendor for bankruptcies for the credit bureaus. So that's kind of the chronology of events, if you will, as to how information gets from and I don't know if you remember, Dave. Remember many years ago when tax liens and civil judgments were on credit reports. Yep. It was the same thing. That information was getting on your credit reports through LexisNexis, the public records vendor. But that information is recorded in courthouses in the clerk of the court. If you go to Pacer, you can find all that stuff, which is the electronic access to the courthouse records. So that's how they get access to that stuff.
Excellent. Okay, we're going to wrap it up here. Dominique, I see your post. Great question. How do I know what my real credit score is? We got a video. I see you're coming from YouTube. Go into the coaching videos on Credit Versio. There's a video there called Different Scores Everywhere. And it explains why you don't have one score or two scores. You've got dozens and dozens of different credit scores. And you're coming a little bit late to the video, but that's going to answer your question right there. Okay, everybody, thank you so much for joining me and John on today's live, and we will see you next Wednesday. Thanks, John. Good luck to your team.
Thanks, John.